So let's take a look at the trades on the day. Fed leaves rates unchanged at 0 to 0.25% is the range of the Fed funds rate. And Cobra 3 is up on the day. It's giving some back here. We get these order imbalances that come out at 10 minutes before the close each day, and it seems to be reversing some of our trades. This is a newer pattern. It's been going on for several months now, but it's not typically this typically hasn't been as volatile of a reversal at 3:50 Eastern Standard Time every day. So we're going to take a look at that, maybe exiting trades a little bit earlier or somehow trying to take advantage of that with a new strategy, because you see quite a decent sized move for this time period. Could be a nice short-term trading strategy if you like to get in and hold strategies for a very short period of time. This is the type of price action that is very possible to have a strategy that works like that. So plus 1,000, plus 1,100 on Cobra 3 ENQ, plus 500 on Cobra 3 E-mini S&P, plus 600 on adaptive moving average. Gap continuation stopped out minus 325 on the day. A 60-minute breakout hit its profit target plus 975. There's only 5 trades on this, and so 4 out of 5 so far with about 6 minutes left till the cash close at 4 p.m. Eastern Standard Time. All strategy access 2. These 2 strategies are not in the portfolio, but you can see those trades. There's one strategy in this workspace that is tick count trend. It had a losing streak and drawdown, and here it is bouncing back a little bit today, plus 1150, 2 for 2. All strategy access 3. Cobra Euro, pretty much a scratch trade, plus 43.75. And SR counter trend crude oil, minus 825. We talked about not trading crude oil. Soybean swing, we've rolled to July, stopped out on that trade, while grains day trader 3 had 2 days in a row where it was profitable. It went short yesterday, long today, plus 87.50 on the day. Such narrow ranges in soybeans. Might consider increasing contract size based on volatility. Cobra Gold plus 575. All strategy access 5. No trades in this workspace. And so those are the trades on the day. Let's go back here. And so market continues to pull back from its 350 prices on the order imbalances. We're going to get some earnings news out. And so if you have strategies after the whole positions beyond 4 p.m., this thing might reverse or it might continue lower. So we tend to see more volatility in the after hours these days. From 3:50 on, and then early in the morning you get more volatility as well. And so low volatility during the day session, time periods like this, just almost looks like a fixed income investment where it just goes straight up in low volatility. And we saw that at the end of 2017 as well. So we will see. It's interesting to forecast what the future may hold in stock index futures with the Fed stepping in front of this, what appears to be economic data that is worse than the Great Depression, while equities continue to move higher as if nothing is really, there's no real problem with the economy. We're marching forward based on our forward-looking mechanism because we are optimistic about the future. It's great to be optimistic. It's good to be realistic as well. And so not so sure that the equities are not forecasting a little bit too much into the future, a little bit too optimistic. And so that's our insights on the day. We still trade what is, and so even if we think these up moves are ridiculous, we're going to turn around and just start shorting them and saying, this is crazy, it's got to go down, and start shorting it. So you can lose like that. So trade what is instead of what it ought to be. I say that a lot, and that's what short-term trading is all about. The market will do anything on any given day that makes no sense to the fundamentals. It can do any given thing on any given month or week or very long period of time that makes no sense and ought to do something else. And so that's why we have trading systems, and that's what the trades are. That's where the trades are on the day. April the 29th, 2020.